When it comes to doing a top-down analysis, reading market structure, and combining timeframes, this is the area that most traders really struggle, especially if they're brand new. So this is my goal for this video. I want to be able to give you the framework and give you the clarity so that you can pull up any pair, do a full top-down analysis, and be confident with your forecast for that pair. We're going to dive in and I'm going to break down how I personally do a top-down analysis, how I find my key areas, and how I find my targets on higher time frames, and then look at lower time frames and put it all together. Let's dive into the charts. Here we have US 30. This is a daily time frame, and you can see some of my annotations on here, and I'm going to take these off and we're going to break down this process. But you can see at the top here, top-down analysis is essentially like reading a book of the charts. If you were going to open up a random book and you were going to just look at a random chapter and just read a paragraph, you're not going to understand what that book is about, right? So you really need to be able to read the entire book so that you can have a good understanding of what the beginning, the middle, and the end is all about. And it's no different when it comes to reading chart graphs. So we have higher time frames from the 8-hour, daily, weekly, and monthly. We have a mid-range of time frames from the 15-minute, 30-minute, 1 hour, 2 hour, 3 hour, 4 hour. There might be some custom time frames in there. And then you have the lower time frame. So you have the 1 minute up to the 15-minute. It doesn't matter what style trader you are. It doesn't matter if you're a scalper or if you're a swing trader or an intraday or a position trader. It all starts on the higher time frame. So again, you have the whole picture in mind. You want to know that if higher time frame is bearish and you're buying on a 5-minute, you just want to be aware of, okay, where's the kill zone, right? Am I in a retracement? Where do I need to start phasing out of my position because this is counter trend, right? So you need to really have a good idea of your surrounding environment. This pattern is universal. It's something that we look for on the 1 minute all the way to the monthly. The markets are fractal, so you're going to see a reflection of this pattern everywhere. So essentially what this pattern is, it's a form of consolidation, like a ranging market, and that can just look something like this where we have price moving sideways. This would be one example of consolidation where we can accurately identify a top and we can accurately identify a bottom of a sideways moving market. Another example of this might be something like this. We have a double top, and it would be essentially same thing as this, but a little bit different, but roughly the same, support and resistance. And then we also have some other variations of this, like different channels, same deal, where people would draw trend lines or put it in a channel, something along the lines of that. Now, essentially what we are then doing is looking for price to whipsaw. We want it to go one way and then the other. So if this is a higher time frame, we want to see a direction. What I mean by that is if we're in a big higher time frame bearish move and we see a range, we want to see this whip up to the top and then whip to the bottom, and that creates the true structure points, a lower high and a lower low. This is a manipulation. In these ranging markets, this is essentially where a lot of opinions are being formed. And when opinions are being formed, you're going to have people that are going to be doing a whole number of things. Sell stops, buy stops, looking to catch breakouts, looking for break, retest, everything. And there are a lot of orders generating, accumulating up and below of these patterns here and here. And then on this one, we have the same thing. And this dollar sign is just going to represent those orders. So essentially, if we were in a bullish market and we had a higher time frame and price was doing something like this, and then we saw this type of pattern where most people might be looking for a reversal, we would look for price to sweep and then aggressively push up like this. And then you would have a new swing point, a true swing point, doing a sweep before making a break of structure, then creating a higher high, or in this case, that other example I did, a lower low. Let's just say, for example, this is a daily or this is a weekly time frame. When this happens, what I am then doing is I bring my attention to this area here. here. And this is the sweep. And I'll look for a kill zone. I'll put my fibs on this move here and I'll measure the swing low to the swing high. I'll have my pullback kill zone. I used the 71 to the 886. And then I'll also have a candle in this area. Whether it's a bearish scenario like this or this, I'm looking for a 2 candle pattern that's in the shape of this. So in this example here, it would be bearish followed by a bullish engulfing candle, just like this. I'll make that green so there's no confusion, and it looked just like that. And on the bearish side, it would look something like this. This pattern is what I would look for here. And I would look for this open here in the kill zone, just like if this pattern was right here. And then I would look for the last down candle before the up move, engulfing candle, and we can see that would be the open, and it's within the 71. So that's just roughly giving me a zone. I don't need to be too accurate with it. And when I get price to come back into this area here on a higher time frame, I am just using these key areas for reference points. This is where I would either look for continuations to happen, reversals to happen, or other patterns to be created. So in this example here, we would look for some type of pattern, maybe something along the lines of that, right? Another little build up here, another sweep, impulsive move, and then that would start the breakout. And then once I have the break of structure and that's confirmed that this is an impulsive move, within this expansion, that is when I'm dropping down to lower time frames and I'm doing the same exact thing. I would just be looking for price inside that move, creating the exact same patterns. Now I know this is starting to look like chicken scratch, but we're gonna head over to the charts in just a moment. So again, I'd be looking for the same type of deal. So you can see here, started moving up, boom. Sweep, boom. So now that we have a rough idea, and again, I'm gonna link that video in the description just so you have a clear idea of exactly what it is I'm talking about. So I'm going to put price like this, just so we have a clear idea of what's going on and why I was looking at these areas. So I'm gonna just make this clear. A nice little thing that I like to do, which makes things super, super simple, is I like to go to a weekly, monthly, and I like to use a line chart. So I'm gonna go to a monthly. By looking at this, we can see that we're bullish. We can see price has just been pushing up, 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 and exactly what I was saying in many of these scenarios, we can see before the move, we can see a sweep before price comes up. We can see another one here. Price had some equal lows here, and before it continued up, right, we can see a sweep and then it goes up. And then we can see another sweep here before it goes up. Here's the big one that brings us to the current price action. And again, we're talking about structure, key areas, and targets. So I just prefaced what we're going to be looking at for key areas, and now we're talking structure. So again, you can see this big move to the downside. That looks like it was breaking down, potential reversal in place, and the next thing you know, it made a strong push up. So that's our trading range, our swing low to our swing high. So we know that if price is trading between these 2 points like it is now, that is a retracement. So we can see here's our impulsive move. This was the manipulation here. Here is our higher high. That's the monthly swing high as I have it labeled here. And then we can see price flagging back. So with this information, we know we're bullish and we know that we're in a retracement as we are in between this point and this point, and I'm going to mark up my kill zone. So now let's go to the weekly time frame. Now we can see the structure in between those 2 swing points. So again, this is the monthly swing high, that's the swing low. In between these 2 points on a monthly, that's usually just going to look more of a straight line. Now we can see all of the swing points. Again, you can see another sweep here before it goes up, another sweep here before it goes up, another sweep here before it goes up. Go back test that on your own time. Anytime you're looking at true structure points, make sure it's sweeping other lows or other highs before it's making a higher high or a lower low. So we can see here are all the swing points, and then we get up here and it makes this double top, and then we can see price, boom, breaks structure, makes this low. Then we have this lower high, more lower lows, lower high, lower low. So now we know we're in a retracement of this move here in a higher time frame pullback. So looking at this for the near side, until this structure breaks here on this pullback, we are bearish. And then as we keep pulling back, as we get deeper into the kill zone, we would potentially look for a continuation move up like this. But since this is weekly and monthly time frames that we're looking at, we really have to hold a lot of weight with this. So when we started turning bearish, if we look at the date, that first break of structure was January 2022. This is a lot of bearish price action. So we have to consider this structure here, even though we're trading in between those two monthly bullish points. Let's zoom in a little bit further now that we can see our bearish structure here. And I'm going to flick to a daily time frame. And on this daily time frame, you're going to see some of my annotations appear. So you can see this pink zone here. Now, the reason why I had that pink zone and not this area here highlighted for a key area is exactly what I was talking about earlier. Now, if we look at this here, we can see that we have this area here. That's just a typical support level that people are looking at for opportunity. And we can also see this little resistance area here. And then we see a push up here, right? Resistance, it broke, support, here's a little flag, and then it looked like it was pushing up, showing an impulsive move. It grabbed these highs and then boom, bearish engulfing candle. If I zoom in there, you can see that pattern. The last up candle followed by bearish engulfing. And this is also significant and confirmed manipulation because of what happens after. We can see price just absolutely tear to the downside. For that same reason, why I would not consider this a significant zone to look for is because we can see the support. We can drag this over. Now it's resistance, and we can see a resistance level. So I personally do not subscribe to support and resistance and trend lines. I use them to look for sweeps. I want to see a sweep of a high and then makes its move. And if you go back test this, you will see that almost every single significant move in the market, the big moves, the strong impulsive moves, are running highs or lows before it happens. Even this move here, right? Boom, ran lows before the actual move started. And you see this over and over again. You can see here, short-term highs, price pushed up, ran the highs, then it made its move. When we have an area like this, from our pattern, what I'm looking for is price to get up into this area and create the same pattern. Push up into this and sweep. A strong break of structure from this area. And then when this happens, it's going to create another key area like this that we can then use for entries or to dial into lower time frames. So again, if we were looking at something like this and price pushed up here, made like a little double top and then swept the bottom first and then an impulsive move, I would be on the bullish side thinking that this is going to come back into this candle here and continue. When it pulls up into this zone here, I want to see the exact same pattern that we're seeing here. So I'm going to press play on this replay mode here, and I'm going to show you some of my markups. I had this marked up weeks ahead of time before it made this move right up in this, where you see all these annotations to the right here. So here we can see price made this little double top here. We can see we had another break retest level here, and price pushed up above these highs, came into this area. Look at this strong wick and then a strong impulsive move. So that's going to be a failed high when we go to a line chart. Now it's a lower high when we get this lower low confirmed here. That, my friends, is how you identify a potential reversal area and then confirm the reversal. So then again, the process repeats. Now we have this candle here. Now we can drop down lower and we can try to get a candle inside of this area here, but nonetheless, it's more of just finding the key area. So there we go. I'm going to mark that one up there. Let's just keep it on the daily just to make things super, super simple. And I'm going to make this light gray so it's not confusing. what I'm gonna do is I'm gonna speed this up and we're gonna get to that price action up in this area. So I started marking this up right around this area here. Now this is our trading range. As long as price is trading in between this manipulation, that swing, and this swing low, we're bearish. We're just waiting for price to set up. And you can see this zone here, this was aligned with the CPI news event. And when you align this type of stuff up with major red folder news economic events, it will tell you exactly when it's going to happen. All of these things here are usually hidden behind news events. So let's just keep watching this price action here. So you can see it's starting to flag here and starting to move sideways. And you can see we have a double top created here, and then price spikes up right here. And then for this to confirm to the downside that it's going to give us the move, go to the line chart. And we would look for this low to be broken right here. As soon as that happens, that's confirmed. And again, this little wick right here, all we're doing with these patterns where we're seeing this right here, sweep and then down, and you find a key area like this key area, like the top key area, and like this top area. If you zoom into like a 15-minute time frame, you will see this exact pattern. It's fractal. So watch, I'll show you. So if I circle this and we drop down to, let's just say a 30-minute, 15-minute time frame, there it is. So you can see it spike up, spiked down, broke structure, came back up, retested it, and then started a breakdown. So if I go back up to a daily time frame and we scroll all the way back over, when this thing breaks this low, that is the confirmation that this is going to start running, and then it's about targets. So when we look at targets, we're looking at swing points. We're looking at equal highs, equal lows, otherwise known as support or resistance. So this area here, just like I wouldn't look at this as a key area, this is a resistance level. We know this is a lot of opinions, a lot of people being induced into the market too soon. I would expect price to run higher and then make its move, which it did here. Think of it like this when you're thinking of targets. Where can price run that's going to hurt the most people? Right? And when I say hurt the most people, stop them out, take their money, piss them off. So let's start running targets. So first, the most obvious target is this. And the reason why I have this low is because when we had this manipulation and we had this move down here, that is the trading range that this price action has been trading. It's that low, this high. So price pulled down and it's been up into the kill zone. It moved sideways and then spiked the high before it started to go. So we have some equal lows right here. These are secondary targets, equal lows. We have another set of relative equal lows right here. And then the main target would be this swing low. Now, again, we have these equal lows because remember, we're higher time frame bearish. So higher time frame is doing this and it pulls back and it's starting to break down and it breaks this structure here, which we can see here is the structure, and it broke. We would then be looking for the signal for the continuation. So here would be our long-term directional bias at these lows down here. With that being said, we can also take some equal lows right here, and let's press play on this. So you can see here, now we broke the daily structure and price has started to run. And I know this looks like a bunch of hindsight in replay mode, but I have the documentation to back all of these markups up. I'm going to also include these in the description. I'm going to post the snapshots and you can see them. They're time stamped, all that good stuff. And you can save them, print them out, and then study them. Now you can see these equal lows have been taken. I'm going to take those off. We broke the structure. We've taken these relative equal lows. This leaves the main target down here, and I'm going to just show you what happens after we see price start to run. So we can see price pushed down, pulled back up, and then came down and ran all of these primary targets. What we would do to take advantage of this is when price is confirmed here in this area here, that it breaks structure like I showed you in that little swing point on the line chart, all we're doing is going to lower time frames here and on here, and we're looking for the exact same pattern. That's all we're doing. So if I drop down to a 4-hour, there were quite a few that we took advantage of, but you can see it right here. Here was FOMC. So you can see price move sideways. This was a really nice one here. Price pushed up, then made a low, broke structure, came back up, pulled into that candle, and then came down and continued. So again, it's just the same patterns over and over again, right? So here's the same thing. Moved sideways, pushed up. This one just ran, but that would have been a nice little entry there. Now, if I go to a weekly time frame, and we're going to come into current price action now, we can see that we have a failed high on that weekly, right? Here's our weekly structure, pulled that low, pushed up, failed, and then with that price action, we can see it broke structure and made a swing. So here's our trading range here. With this current week, this is the first week of May. So we've already had unemployment rates, we have ADP, we have FOMC, and then we have NFP tomorrow. Look where price came all the way back to leading up. But you can see my markups. We're coming into my current markups. I don't know if you guys have noticed the pattern. It keeps stepping down. So you can see the pattern, the zone. Price comes up, the pattern, the zone. It comes back up, the pattern, the zone. Now watch this. This is current price action. Watch the pattern that's getting created as we approach the zone, and then watch how it breaks down. So we can see price made a little double top here, bullish move, looks like a flag. We were looking for that to continue, ran those equal highs, pushed up here, ran the equals, right? Made this support level here, came up, swept, almost pinpointed this area for the previous CPI event, which I have it labeled right here. This was last month's CPI event. And now watch this. And now it broke structure and starting to break down. And again, this move here, that is where we look for the moves. The exact same patterns. And the video that I have linked in the description of this video talking about the candlestick patterns, I talk about the price action here. The trades that I show running live, and all of the documentation was the actual trades, and you guys can see the dates on it. May 1st, May 2nd, May 3rd, and today's May 4th, tomorrow's NFP. I'm gonna show you guys the exact same thing. So if I drop down, you're gonna see the exact same patterns over and over and over again. This is what I'm talking about. It's fractal. This can make your trading so much easier. And this stuff all happens at very specific times, especially when you're looking at a pair like an indice. So you can see here, it moves sideways. I'm going to throw in my sessions. Asian session, less volume. Price pushes up in London, spikes the high, and then pushes down. That's my first entry I was looking for. Then it made another one here. Little run on the high, ran those relative equal highs, and then came right back up. And look at the time, exactly 9:30, right at equity. This was FOMC yesterday. Price moved sideways, spiked up before the move. I was looking for a retracement back. I caught some moves here and in this yesterday, and then it made its move. I was looking for a retracement back up into this area. It didn't. It came short. But again, it's like the same thing over and over and over again. We're just looking for the same patterns on higher time frames, marking up those key areas, and then when price gets to those areas, then we drop in like we did here. We can see that's a clear daily expansion, just like it was over here. And then we just zoom in. That was all 15 to 1 hour that I was just viewing those on. And you can even continue to go lower down to 1 minute and see the exact same patterns in those lower time frame impulsive moves. And this just repeats. And all you're doing is aligning short-term targets, previous day lows, previous day highs, previous week lows, swing highs, equal lows, things of that nature. And you just start stacking and stacking. So again, you can see now with the targets, this would be previous day low. Now we have our swing low, another double bottom, equal low, March low, and then we have our equal lows, higher time frame swing low, and potentially we could be getting ready for something like this for the next several weeks. So that's how I keep my top-down analysis. Super simple. This is how I combine my time frames, how I find my targets, and find my key areas. Hopefully this was of value to you. But if you want some further additional resources, again, make sure to check out my page, like this video, and subscribe. And also let me know in the comments what else you'd like me to make for videos. If you have any suggestions, I'd love to hear them. And I'll see you in the next one.